Hello traders, welcome to Trading the Trend. I am Dennis and this is my weekly look at the markets for week ending April 7th, and right now we're looking at the S&P 500 weekly chart, and if you look at that little doji there, you would probably think it was a pretty uneventful week, even though that could not be further from the truth. Let's focus in a little bit. We'll look at the daily, and you can see we had this pretty good size candle. That was from Wednesday. That's when the Federal Reserve released its minutes from its earlier meetings, and apparently the Federal Reserve is now talking about unwinding all of its QE doings, where it ran up like $4 trillion in phony money to try to stimulate the economy, and now they kind of want to unwind that and buy all that back, or pull all that money back out of the economy. So that sent stocks down, although there was no continuation after that. It kind of went sideways the rest of the week. And then of course on Friday we have non-farm payroll. That turned out to be a big nothing. And we also had the U.S. attacking Syria with 59 Tomahawk missiles, and that didn't seem to stir up the market much. So the market is kind of ignoring what's going on elsewhere in the world. Matter of fact, if you want to know why we attacked, the real reason we attacked Syria, let's look at the company that makes the Tomahawk missile. That is Raytheon. That is RTN. There we go, Raytheon. And what had that stock do? Look at that. After that attack, that stock gaps up, and it did sell off a little bit into the close of the market. Still, huge gap up for Raytheon following that attack, where we launched 59 cruise missiles at a cost of like $1.5 million for each missile. So the government's going to have to replace those, which means they're going to be giving Raytheon about $100 million. So their stock is way up. So ignore all the stories about reason for attacking Syria over the gas attacks. No, it has nothing to do with that. We just had a bunch of Tomahawk missiles that we needed to get rid of. And that's what we did. We got rid of those missiles, so Raytheon is going to make a lot of money in the coming weeks. Moving on, what happened in the oil sector? We actually got back up above $51 a barrel. That's my line in the sand for being bullish on oil. So we had this little bit of a pullback, and now we seem to be in the up move. So we're going to be watching as we try to take out these highs up here. With us stirring up trouble in the Middle East, then we'll probably see oil continue to move up. I know we had a big hike in gas prices here locally. It went up like 20 cents a gallon overnight on, I think, Wednesday night or Thursday night. Funny thing is, gas prices actually went up before the missile attack. So you think they might have known something. Not that I'm a conspiracy theory person, but it's just funny how these things happen to work together at times. Let's look at some more commodities. What happened in the gold sector? Looking at the gold miners, not a big move. So usually when we start talking about a new war, you'd think gold prices would jump. Didn't move a whole lot. The metals themselves, gold up just a tiny bit. It's having trouble at that 40-week moving average. It rejected it here, and now it's having a little trouble again. Silver actually had a little bit of a down week, so the metals, not a whole lot happening there. Now let's look at our currencies. And here's our strong week rankings. The yen is still on top. It's been on top since March 22nd, and with the Aussie moving all the way down to the 8th position, the yen is now top currency for year to date. So it's not only leading my strong week rankings, but it's also leading year to date. Now let's look at some currency pairs. We'll start with the Euro US dollar weekly chart, and we're still in that trading range that's going on for over 2 years now, but we did have continuation after that big reversal engulfing candle from the week before. So not as big of a down week, but I would look forward to at least challenge this 1.05 area. We'll see what happens when it gets down to there. Aussie, with Aussie pulling back, you would expect a pretty good down candle, and we did. How much more this pulls back, we'll just have to see, but the market has kind of gone into a risk off mode, and that's usually bad for the Aussie because the Aussie is the risk on trade. Some other things to look at, US dollar, yen, it's finding support right there at the 110 mark, which is also where the 200-week moving average is, and you had a couple dojis in a row, almost a little pin bar reversal this past week. So we'll have to see if that can hold, and maybe the yen has been strong for quite a while, and it's accustomed to see the yen ping pong back and forth between the number 1 and number 8 position several times a year. So the yen's had a pretty good run, so it might be ready to start weakening, so that would be good for this US dollar yen pair to move up from here. What else to look at? I've been watching that euro pound trade, and this head and shoulders price was a little up this week. Not a bad looking chart, actually. Seeing a little bit of a pullback after 3 straight down weeks is not bad, so maybe we'll start heading down again this coming week, as long as we stay below, what about 87.50. I still feel pretty good about this moving lower. We do want to see a break of this neckline. We've been waiting a long time on that. So a break of that neckline at the 0.8350 would be a big deal for this pair, and then I would expect to see a move down to at least 0.80 and possibly into this 0.75 area if we can get that neckline break. Anyway, that's what I got for you for this week. Hopefully everyone have a great weekend, and I will catch you later.